Right now, if you have a reverse mortgage or you're in the middle of getting one, there is a real chance somewhere in that stack of paperwork is a fee you were never actually required to pay. Some of these are things a lender quietly hopes you never notice. A couple of them are not just unfair, they are flat out against federal rules governing this exact loan. And nobody is going to hand you a refund and apologize. The lender does not call you and say, "Actually, we shouldn't have charged you that." The paperwork just sits there, signed, and the money is already gone, because the entire system depends on you never knowing which lines you were allowed to push back on. So today I'm going to walk you through 6 of these, one at a time, and tell you exactly how to catch each one, whether you're still shopping for a reverse mortgage or you already closed on one years ago. Before you decide this doesn't apply to you, let me clear up the 2 mistakes that keep people from ever checking. Some of you are thinking, "I already closed on my loan 2 years ago, so this is water under the bridge." It isn't. Some of these fees show up every single month for the life of the loan, which means catching one now still saves you money for years to come. Others of you are thinking, "I haven't gotten a reverse mortgage yet, so none of this touches me." That's backwards too. This is exactly the video you want before you sign anything, because every one of these is far easier to avoid before closing than to fix after. Whichever one you are, stay with me, because at least one of these 6 almost certainly applies to your situation. My name is Gerald Whitfield, and for years I've sat across kitchen tables with homeowners going through their reverse mortgage paperwork line by line, closing disclosures, servicing statements, the whole stack. And I'll tell you the pattern that shows up more than any other. It's rarely a dramatic scam. It's usually a quiet fee sitting in plain sight on a form nobody ever explained, charged to someone who had every right to say no and simply never knew they could. Here's how this is going to go. I'll walk through all 6, one at a time, in plain English. On each one, I'll tell you exactly who it hits hardest and the exact step to stop it. And I want you to stay through to the 6th one, because it's the one buried the deepest in the paperwork, and it's often the single biggest number on this entire list. Let's start with number 1. Number 1 is the origination fee that runs over the federal cap. Here's the part almost nobody checks. The federal program behind most reverse mortgages sets an actual formula for the maximum origination fee a lender is allowed to charge. It isn't just whatever the lender feels like writing on the page. Broadly, it's calculated as a percentage of your home's value, with both a floor and a ceiling built into the formula. And once you hit that ceiling, the lender is not permitted to charge more, no matter how they try to justify it. Here's why this one slips through. Most homeowners have no idea a cap exists at all, so a number on a closing disclosure just looks like the fee, full stop, with nothing to compare it against. If a lender pads that number past the legal ceiling, there's rarely anyone in the room to catch it, because the whole point of a cap only works if the borrower knows to check. So who does this help the most? Anyone shopping for a reverse mortgage right now, before signing anything, and anyone reviewing paperwork on a loan they closed recently enough to still have documents on hand. The step is simple. Ask your lender directly, in writing, to show you exactly how your origination fee was calculated against the federal maximum. And if you already have your closing disclosure, have a HUD-approved counselor review that one number specifically. It takes 5 minutes, and it's the fastest way to know if you were overcharged before you ever sign. Number 2 is the one that keeps draining an account quietly, month after month, the servicing fee that's higher than it's supposed to be. Older reverse mortgages allowed a small monthly servicing fee, and current guidelines have pushed that number down substantially for most loans. Here's the problem. A fee that was standard on a loan closed years ago can still be sitting on the books today, unquestioned, simply because nobody ever went back to check whether it should have been reduced or removed entirely under current servicing rules. Let me translate why this one matters more than it looks. A few dollars a month sounds small until you multiply it across every month for the life of the loan. That's not a one-time charge. That's a subscription you never agreed to renew, quietly reducing the equity you have left in the home every single month. Who does this help the most? Anyone with an older reverse mortgage that's been in place for several years without ever being reviewed. The step. Call your loan servicer directly and ask them to confirm, in writing, the exact monthly servicing fee currently being charged and whether that amount is consistent with current program guidelines for your loan type. If it isn't, that's your opening to have it corrected. Number 3 is fee packing on third-party charges. Appraisal fees, title fees, and document preparation fees marked up beyond their actual cost. Here's how this one works. A reverse mortgage closing involves several genuine third-party costs: an appraisal, a title search, recording fees. Those are real and legitimate. What's not legitimate is a lender adding a markup on top of the actual invoice from that third party and passing the inflated number on to you as if it were the real cost. This practice has a name in the industry: fee packing, and in most cases, marking up a third-party charge beyond its actual cost is not allowed. Here's the part that matters most. You are entitled to see the actual invoices behind these charges, not just the total your lender lists on the closing disclosure. If the number on your paperwork doesn't match what the appraiser or title company actually charged, that gap is the markup, and it should never have been there. Who does this help the most? Anyone currently in the process of closing a reverse mortgage. The step: before you sign, ask your lender directly for the itemized invoices behind every third-party fee on your closing disclosure and compare them line by line. If a number doesn't match, ask why, in writing, before you sign anything. Number 4 is being required to buy an insurance product or annuity as a condition of getting your reverse mortgage. This is the one I want you to remember most clearly, because it is one of the most serious items on this entire list. Federal rules explicitly prohibit a lender from requiring you to purchase an annuity, an insurance policy, or any other financial product as a condition of getting a reverse mortgage. That kind of pressure, "You'll get a better rate if you also buy this," or "This needs to go along with your loan," is not a normal part of the process. It's a red flag. Let me translate why this shows up at all. Some products carry a commission for whoever sells them, which creates a real incentive for a salesperson to bundle something you don't need into a transaction you do need. The loan and the extra product are two completely separate things, and no legitimate lender should ever make one contingent on the other. Who does this help the most? Literally everyone considering a reverse mortgage, because this one has nothing to do with your specific financial situation. It's simply not allowed, for anybody. The step: if anyone tells you a reverse mortgage requires you to also buy an insurance product or an annuity, stop and report it to your state's Department of Insurance or the Federal Consumer Financial Protection Bureau. That sentence alone should end that conversation. Number 5 is a required biased closing agent or attorney that you had no say in choosing. You generally have the right to shop for your own closing agent, your own attorney, and your own title company, within the bounds of what your state requires. A lender steering you exclusively toward a specific, affiliated closing agent, especially one they have a financial relationship with, without disclosing that relationship, or without giving you the option to choose your own, sits in a gray area that regulators have paid close attention to for years. Here's why it matters. An affiliated closing agent has an incentive to move quickly and quietly in the lender's favor, not necessarily in yours. Being able to pick your own means having someone in that room whose only job is looking out for you. Who does this help the most? Anyone currently shopping for a reverse mortgage who hasn't yet locked in a closing agent. The step: ask your lender directly whether you're required to use a specific closing agent or attorney, and if there's any financial relationship between your lender and that agent. You are almost always allowed to bring your own. And that brings us to number 6, the closer, and the one I asked you to stay for: a prepayment penalty. Here's what should genuinely bother you about this one. Federal rules on the most common type of reverse mortgage explicitly prohibit a prepayment penalty. You are allowed to pay down or pay off a reverse mortgage early, partially or completely, at any time, without being charged a fee for doing it. If a lender writes a prepayment penalty into your paperwork, or verbally discourages you from paying extra by implying there's a cost to it, that is directly against the rule, not a gray area like some of the others on this list. Let me translate why this one is often the biggest number on the whole list. A prepayment penalty, if one were wrongly applied, isn't a small line item fee. It can be calculated as a percentage of your remaining loan balance, which on a reverse mortgage can mean thousands of dollars, all for doing something you were always legally entitled to do for free. Who does this help the most? Anyone who has ever paid down their reverse mortgage early, or is planning to, especially anyone who was told there would be a cost for doing so. The step: check your loan documents specifically for any prepayment penalty clause, and if you were ever charged one, or discouraged from paying early because of one, that is worth raising directly with a HUD-approved counselor and, if needed, a formal complaint. Let me put a real face on all of this because I want you to see how it adds up. I think of a woman I'll call Ruth, 72, widowed, careful with money, 3 years into her reverse mortgage. When we finally sat down and went through her paperwork line by line, here's what we found. Her monthly servicing fee was higher than current guidelines allowed for her loan type. Her original closing disclosure showed a title fee that didn't match the actual invoice from the title company by nearly $200. And buried in her original sales conversation, which she'd forgotten entirely, was a moment where she'd been told an annuity usually goes along with the loan, something she never should have been told at all. None of it was one dramatic theft. It was 3 quiet fees, sitting in plain sight, because nobody had ever sat her down and shown her where to look. So let's bring it together, because at least one of these 6 almost certainly touches your situation. The origination fee that may run past the federal cap, the servicing fee that never got adjusted down, the third-party charges quietly marked up, the insurance or annuity you should never be required to buy, the closing agent you always had the right to choose yourself, and the prepayment penalty that isn't legally allowed to exist at all. Stack even 2 or 3 of these together, and you're not talking about pocket change. You're talking about real money that was never legitimately owed in the first place. Now, one serious warning, because wherever there's money wrongly taken from seniors, someone shows up offering to get it back for a cut. Every single step on this list is free to do yourself. You never need to pay a company a percentage to ask your lender a question, request an invoice, or file a complaint with a regulator. If anyone calls you promising to recover your overcharged fees for a fee of their own, hang up. They're going to do the exact same free steps I just gave you and take a slice of what's already yours. This is general education, not legal advice for your specific loan. Whether a particular fee was actually improper depends on your loan type, when it closed, and your state's specific rules. So before you act on any of this, confirm your situation with a HUD-approved reverse mortgage counselor or with your state's Department of Insurance if a product was involved. So here is exactly what to do this week. If you're shopping for a reverse mortgage, ask for the origination fee formula, the itemized third-party invoices, and confirm in writing you're not required to buy any other product. If you already have one, call your servicer and ask them to confirm your current monthly servicing fee against today's guidelines, and pull your original documents to check for a prepayment penalty clause. None of it costs $1, and none of it requires a lawyer to get started. It just requires you to ask. If this opened your eyes, do one thing for me. Share it with someone you love who has a reverse mortgage or is thinking about getting one, especially anyone who's never once gone back through their paperwork since the day they signed it. They're the most likely person to be quietly overpaying, and the least likely to ever hear they don't have to. Subscribe, turn on the bell so the next one finds you, and I will see you in the next video.